Hello, hello, hello. Let me know if you can see me, if you can hear me. Give me 1 second while I plug in my device here because my iPad just died. All right, so I think you guys can see me. Welcome to Tuesday, the live stream where we're going to go over some questions and answers, some cool trade ideas, answer anything that you guys are working on. We're going to go for about 30, 45 minutes or something like that today. And let me just pull up my chat. Give me a moment here. That way I can see your messages as I'm talking, and then I can respond to those. The market's been kind of crazy, but guess what? The market's always crazy, right? So things go up, things go down. It doesn't matter if there's war or threat to war or whatever is happening in the news. I had this conversation with somebody recently who was talking about the market being now it's different, or now there's this happening in globally in the world. And the fact is that there's always something happening, and the market is always going up and always going down. So what we want to do when we trade options is not try to predict where the market's going to go. Hey, I think it's going to go here because of this, or I think it's going to go down because of that. No, we want to create income for ourselves no matter what happens. And the way we do that is from two basic strategies, right? So selling puts on good quality stocks that we like anyway. We choose a strike price that we're okay buying the shares at. And if and when we have to buy the shares, it's okay. Don't be afraid of assignment. You will turn right around and sell a covered call against those shares. So that the intention to selling options is not to hold on to shares for an extended period of time. It's not to capitalize on significant increases in stocks that we're trading. We're not trying to hit home runs. What we're trying to do is just hit singles. And singles meaning we're just creating income as we go to support our lifestyle, basically. So that's what we're doing. Let me just pull up my chat. Give me 1 second here. All right. So I don't have any messages yet. So let me know in the comments in the live chat what tickers you guys want to look through. In the meantime, I want to show you guys a really, really cool thing that I started putting together after I had a conversation the other day with a trader. And I'm not sure if he's in this audience, but I think it will be very beneficial to all of you guys, because here's the thing when it comes to trading. It is really easy to make money, and it's harder not to lose it. And one way that people lose money, and you can lose a significant amount of money, is you take on too much risk and you don't understand the risk. So I've been spending all of my time. You guys might notice I haven't done a video in, I don't know, 4 or 5 days. And the reason for that is that I've literally been spending all of my time programming tools that I use, but also that can help other people not only make money, but not blow up their account and be able to identify where they're going wrong. So here's the thing. In the past, I've taught lots of people, in group settings and live events and one-on-one mentorships. And I realized something the other day. People seem like they're doing great. And then sometimes we sort of separate, somebody wants to hey, I think I'm ready to trade on my own, and they start doing their own thing. And then all of a sudden they're making choices and, trades that they should not be making. So that's what kind of really spurred my interest in setting up these new apps. I want to show you kind of a cool thing. And let's see, it's not out yet, but it will be very soon. And so this is kind of like you can import all of your positions. So my conversation with this guy I had last weekend, that I had taught recently, I said, how are you doing? Let me see your portfolio and what do you got going? And he sent me his positions. Hey, I have 100 of this, I have 200 of that, I got these short puts, I got those short puts. I think you guys can see my screen. Just let me know if you can't. I think there's just a delay from the time I say something to the time that you see it on your end. But going back to my conversation with this individual a few days ago, he sent me his positions, and he was actually like in the money on a bunch of positions that I think he knew it, but he didn't really realize what the impact of that was. So I've been building this this calculator where you put all your stuff in, and it's not done yet, which is why it's not public. But to give you guys sort of a preview, you put all your positions in here, and it tells you right off the bat, okay, well, I'm in the money on these particular trades. What does that mean? That means I have to come up with another X amount of dollars in order to buy those shares if I got assigned. Now, I want you guys to know this, because this is another mistake that sometimes people don't fully understand. First of all, my intention to teach you guys on these programs is through my experience where I see other people messing up and help you so you're not one of those people. So oftentimes people will think, okay, well, my put that I sold doesn't expire until July. And, I sold a $100 put, and right now the price is at $80, let's say. And they think because the expiration date is in July that they're okay. The fact is, you're not necessarily okay, because here's how assignments work. Anytime your put goes in the money, you can be assigned. So in other words, if you sell a $100 put and the stock goes to $99.99, you could get assigned. Now, how does that work? A lot of people say, well, how does that work, Michelle? It's up to the individual that actually owns that contract. So the market, right? So the market players, the market makers, you might say, kind of match people up, buyers and sellers. And it's done automatically, electronically. So you'll have like your contracts here. I'm just giving you an example. I'm going to type in Tesla as an example. That's always my favorite. And, let's say I was to sell, I don't know, I'll just pull up a random one, April 2nd, and I'm going to sell a, $360 put that expires on April 2nd. Well, guess what? Today or tomorrow, or anytime up until the contract expires, if the price of Tesla goes below that strike price, the person that purchased that put on the other side, let's say it's like Jane Doe in Idaho, right? If she assigns, she can elect to assign it or not assign it. Now, it is true that most contracts don't get assigned until expiration. So that's a fact. However, it can happen. And so what's important for you to recognize is that once you go in the money, you have to know, okay, I got to put up, X dollars in order to buy those shares. So this kind of like, this tool that I'm building helps you understand that, okay, I only have this amount of money. So I still have a little bit of money, but let's see what happens if my my underlyings go down, let's say 7%. And I want to tell you this. Any broker dealer that you're trading with does not have this sort of functionality to help traders identify where their risk is. If my tickers go down 5%, 6%, 8%, or what if Google goes down 5% and Apple goes down 6% and Tesla goes up 2%, where does that put me? Not one broker dealer offers that. And I can tell you without question, because I've had this conversation over the last 10 years about this scenario. And there is some functionality. So like, for example, Schwab, as an example, who I'm currently trading through, they have, an analyze tab where you can sort of, get a sense of, if this happens, how does that affect my account? It's very like confusing and not very user friendly to use. And it's not based on per position. You do not have the functionality or the ability to say, okay, if all my stuff goes down 7%, or if this ticker goes down X% and this one goes up X%, that does not exist. And now, you might be thinking, and I'll mention this before you even say it in the chat. You might be thinking, why don't they do that? This is 2026, man. There's no better time to be on the planet, because now we have AI, which is what I'm using to help me program these tools, because I'm not a programmer, right? But I'm becoming a programmer by doing this. So Michelle, if we live in this like amazing universe where there's AI that can like do something at the blink of an eye, why is that there? You must be wrong. No, I'm not wrong. And the reason why it's there, and this is only my opinion, maybe it's not correct, But ultimately, broker dealers, the financial markets, you might say, the people that run the financial markets, they don't want regular retail traders to be successful. Or maybe they say they want it, but they really don't. Because if they did, they would give you the tools to help you do that, and the information, and the technology, or the data, that kind of thing. It's kind of like big pharma. And I'm not going to get political, but I do want to say this because it's very similar. And this is my belief. And you could tell me in the chat what you think, if you agree or disagree. Like, you go to the doctor and they give you a pill, right? Why do they do that when they can solve the actual problem that's wrong with you oftentimes? Because there's too much money in giving you a pill and keeping you on that hamster wheel. And investments is the same thing. So I am here to not only obviously I use these tools, and I started down this path by creating tools that I use myself, by making my own life more efficient. And then thinking, okay, well, if it helps me, it could help like tons of other people. But really, stuff like this can actually start an actual movement. You don't need a financial advisor. You don't need to be buying like SPY and just put it in an index fund and I'm going to make 7% a year. No, you can control your life. You can control what you're doing and what you're creating on a day-to-day basis. And you might say, hey, Michelle, I never traded stocks before. I didn't learn that stuff. My parents didn't trade stocks. I don't know how that works. I wasn't good in school. I didn't graduate high school. Listen, everybody's got their own story. You know what I mean? No story is any worse or more challenging than another. Everybody's got a story. Those are excuses. All you need is drive and interest, and you have to put some effort in, right? So I can't just I don't know. Sometimes people, they just want me to teach them in a minute or something. It takes a little bit of time. It's like learning a new language. But if you put the effort in, you will be successful. So I'm here to tell you that. Anyway, going back to this tool, let me provide a scenario. Like, let's say my tickers go down 7%. Where does that put me? Okay, if I'm short this put, let's say, and it's trading at $10 right now, where's that going to go? Well, that's probably going to go to about $13, because if the price goes down, the put price will go up. And what does that mean? Well, that means that you're in risk of assignment. And then it kind of just really identifies things and then puts it in your face. So that's important. And then another thing that I really want to talk about before I forget, and I'm going to get to some of the questions as well, is position sizing. Like, way too many people, they got let's say $10,000 in an account, and then they sell 5 contracts of something. You don't want to do that. Start with one, first of all. And also, a lot of times people will say, well, where do I start with? What kind of ticker do I start with? I'm building some tools that will help you do that. But in general, let's say if you have, I'm just going to use a round number. I got $100,000 to invest. You don't want to put more than, let's say, a third in one ticker, a third in another ticker, a third in another ticker. You don't need 10 tickers, 8 tickers. You just need 3, 4, 5 maybe. Diversification is misunderstood. You don't have to have a whole bunch of things, and having a whole bunch of things does not give you safety that you think it gives you. And what you want to do is, you don't want to go all in on one position. You don't want to say, hey, I like Google, so let me sell 3 contracts because I got enough money. No, you sell 1 contract. And then if the stock goes down, you can sell another contract as it goes down. Because what you want to do is, you never want to be married to these tickers. You just want to use the stock in order to create income for yourself. That's it, right? Anyway, let's get to some questions. Arla asks, can your shares be called away for covered calls as well if it's in the money before expiration, and let's say if it's months out? So that's a great question, and I'm glad that you asked that. Let's go through how that works. So let's say I own 100 shares of Google, and I bought it at $100, and then I sell $120 call that expires in 6 months. Anytime anything goes in the money, you have risk of assignment. So that's on the put side and the call side, regardless of the expiration date. Now, that said, like I said a moment ago, usually things don't get assigned until expiration date, number one. Number two, you want to keep in mind that the deeper it goes in the money, the more likely you might get assigned. So let me, along Arla's question, let's say I sell a hundred, I own the stock for $100. I sold this $120 call. And let's say now the stock is trading at $200, right? Now, this is a mistake that a lot of people make. Many traders will say, oh my gosh, they have that FOMO, right? That fear of missing out. Oh, I sold a $120 call, but the stock's 200 and I gave up all that gain. And then I roll the contract to, a month further down the road. Don't do that. If you do that, that's a big mistake. You can do that. Maybe it's successful, like temporarily. What I'm trying to do is teach you guys tools and knowledge to be successful, not for a week or a month, but for the whole rest of your life. You will not be, I guarantee you will not be successful if you think in those terms. I sold a covered call, now the stock shot up, let me roll that contract because I'm going to make more money. No, you will not be successful long term. Just take assignment. So the answer to Arla's question is yes, it can get assigned anytime. The deeper it's in the money, the more likely it can get assigned, and be okay with that. When you're selling a contract, you have to think ahead of time, okay, if the stock goes to this price, I'm going to buy it. If the stock goes on the call side, I'm going to sell my shares at this price. You have to think through that. And you don't want to you could change your mind, as you go. You could buy contracts back. But usually you only want to do that to lock in gains. You don't want to roll a covered call that's already working. You're already making money. Just sell your shares. Don't be greedy. Pigs get slaughtered in the market. You're not trading stocks for the capital appreciation. You're trading options for the cash flow. And cash flow, I want to take a moment and talk about the difference between cash flow, realized gains, and paper gains. Cash flow is superior to paper gains. I trade stock and the stock goes up and I make money on paper. It doesn't do anything for you. How do you pay your bills? How do you do fun stuff? Listen, I'll give you an example. So a friend of mine who I've known for many years, he's in Cabo right now. I'm in California. I'm in LA. And so we were talking about some stuff yesterday. And so I was talking about like vibe coding and enhancing efficiencies and creating stuff and how AI can be life-changing. And he owns a business in South Carolina, but we've known each other for a long time. And so, I was showing him what you can build through vibe coding. Anyway, long story short, he booked a flight for me to come hang out with him tomorrow, a very generous friend of mine. And we're going to just go through some business and, I don't know, go swimming, catch a tan. It's been a while since I had a little R&R, so it's kind of cool for me. And it's cool for him because I'm going to kind of get him up and running on some AI stuff. And anyway, my point is, how do you book a flight? Do you use paper gains? No, you use cash. Cash is king. I'm sure you guys have heard that mantra before. Cash is king. Cash pays for everything. Without cash, you can't do anything. And so some people say, well, money doesn't make the world go round, or money doesn't bring happiness, or whatever those sayings are. But the fact is, cash gives you options, choices. I'll say choices, not to confuse the word options. Cash gives you choices. It allowed him to, take out his credit card and book a flight. It allows me to be able to actually take time. I don't have to call a boss and say, hey, do you mind if I take a few days off? No, because I'm doing my own thing. You become your own boss. So it's like, there is no reason in the world that people should not be trading options. I don't know. I get so carried away when I talk about it like this. And there's no excuse for you not to be able to do that. So yeah. So who's got something that they want to talk about today? I showed you a couple of cool things. Use these tools. And by the way, if anybody's trading and you're selling a put, you got to be using this program. There's a 7-day free trial. You could use a calculator, and I could show you how to do that. And what you do is you connect your data. So let's say, I don't know, let's see, I'm looking at, I don't know, what's a good, SMCI is a popular ticker lately, right? So they've had some challenges where they dropped pretty significantly, right? So they're kind of sideways right here, and then boom, they go down like a rock, right? So if something goes down in price, that could be a good opportunity to what? Sell a put. Why? Because when the stock goes down, puts are more expensive. I'm getting paid more for the risk that I'm taking. So for example, SMCI is $22.61 a share right now. We could, let's say, let's look at April 2nd, because I like it to be short term. So we could say, okay, well, here's a $20 put, and I could, let's say, let me go to my calculator here. I could do this. Let me walk through this. This is kind of old school, right? So let's say I want to sell a $20 put and it's trading at $6. I'm gonna divide my income, the premium that I'm making, into the capital that I'm putting up. In this case, is $2,000, right? Because it's a $20 strike price, and that gives me a rate of return of what, 0.003. But today is what, the 31st, and I'm holding this until Thursday. Friday the market's closed because of the holiday. So this is what's today? Tuesday, Wednesday, Thursday. So I'm holding this for 3 days, and then I multiply by 252 trading days, and that gives us an annualized rate of return. If you're selling puts and you're not calculating your rate of return, you're doing it wrong. You have to calculate your rate of return, because that tells you if it's a good trade or not. What if this was, let me look at SPY as an example. SPY, lots of people are always talking about SPY, and I'll look at the same April 2nd date. Right now it's trading at $6.49 a share, right? So let's go into, I don't know, let's say I sell a 620 put. So it's kind of far away from where it's trading, $17. So let me pull back up my calculator, and I divide $17 into 62,000, because it's a $620 put. Super expensive if I get assigned. Not that likely to get assigned, but it could happen. And if it does happen, I need 62K to kick up the money. Well, now I'm making this divided by 3 days times 252. So you could do all that stuff yourself mathematically, or you could just say, hey, let me just look at SPY as an example, and let me fetch the data like freaking magic, right? And then let me choose an expiration date, right? So SPY, the cool part about SPY is it trades every day, right? So you could look at today, tomorrow, the next day. Let me look at the same April 2nd. You can choose, I want to be conservative, I want to be middle of the road, I want to be aggressive. Let's choose a higher delta so we make a little bit more money. And then let me just click a button and get all that content in front of me like magic. Okay, it pulls up a 23 delta. You're getting paid $170 on this contract. You're holding it for 3 days. You're making this amount of money for 3 days time. You're making this amount of money for, annualized. Or let's go more conservative. Let me go with a 637 contract instead of 641. Okay, it changes the numbers. Let me go more aggressive. Let me go with a 643 contract, let's say. Okay, bam, it just like refreshes the screen and changes the numbers for us. Let me change from mid-range. Let me be a little bit more aggressive, right? Just as an example, this is how we walk through ideas. Okay, if I wanted to take a little more risk, what does that look like? Okay, this contract, I can get paid this. So instead of like flipping back and forth to your broker screen and that kind of thing, and type it into a calculator, and maybe you type it wrong and then you get the wrong answer and you're making a decision based on the wrong, information, this does it all for you. So that was my intention on creating these tools. Now, it's funny, I got an email the other day, kind of a harsh email. I usually get, I want to say 99% of the comments that I receive on YouTube and email and whatever, they're all positive. But once in a while, I get this like sassy one. So I got this email the other day. Michelle, like, what are you doing? I thought you said the calculators were going to be free. I never said that. It's free for 7 days. When I tell you, first of all, I pay to host and build all this stuff because I'm using technology and that stuff is not free. So I have a hard dollar cost that I'm paying to create this stuff, number one. And number two, more importantly than that, when I tell you I've spent, like, I wake up in the morning at like 6:30 in that neighborhood. I probably go to bed in like 2 a.m., 1 a.m., something like that. I don't sleep that much. When I get up and until I go to bed, with the exception of, I make my breakfast and walk the dogs and sometimes do cool stuff with my kids or something like that. But for the most part, I'm working. No, it's not free, and it shouldn't be free. And if you're looking for something free, you're in the wrong community. I give a lot of stuff for free, like this live stream where I'm helping you. Put a comment in the chat. Ask me about a ticker. Tell me about a problem that you're having, and I'm happy to help you. I've done lots of free, live events. Yeah, and I have this a community page that I have lots of stuff for free, but not everything is free, and we don't live in that kind of world. And so yeah, so there's that. Okay, cool. So who's got some more questions? Let me know in the chat. What sort of ticker are you looking at? Let's go back to SMCI for a moment. SMCI, and I want to fetch the data, and I want to choose the expiration date. And let's say I don't want to look at this week. I personally like short-term stuff, but let's say you got a job and you don't want to look at your stuff a lot and you want to do 1 month. Okay, listen, there's no wrong answer. There's some wrong answers, like you don't ever want to roll your stuff, so that's kind of a wrong answer. But relating to like 1 week, 1 month, or whatever, it's whatever you're comfortable with, whatever fits with your lifestyle. I like weekly because I like to flip my money. I don't like to tie up my money for extended periods of time, and I like to flip it. I'd rather make a little bit less, but I'm flipping it all the time and I have less risk. It's not about how much money do you make, how much risk do you take in order to make that money, right? So like let me show you as an example. I'm going to go middle of the road for SMCI, and I'm going to go a month out. Well, guess what? I mean, it just pulls it up for me. I can sell a $20 strike. It's going for $75 right now. The delta is 25, meaning that it has an approximate 25% likelihood that the stock is going to go from where it is lower, right, to the strike price before the contract expires. How many days am I holding? How much am I money, or how much am I making rather? What's the capital I have to put up? What's my rate of return, for that period of time? What's my rate of return annualized? And then I could, make changes. I can go a little bit more aggressive. So it's kind of cool, so yeah. Also, I want to talk about averaging down for a moment. Listen, most people don't do this. So here's how most traders think, and I want to address this, and I want to encourage you not to be like most traders. First of all, number one, if you do what most people do in general, you are going to get what most people get in general. I want to say that again, and I want you to hear me loud and clear in this. If you do what most people do, you are going to get what most people get. Now, do you think that most people are trading options, living the lifestyle of their dreams, like talking to their friend and saying, hey, book me a flight, and I'm going to come meet you in Cabo tomorrow morning, right? Most people are not doing that kind of stuff. Do you want to do that kind of stuff? Do you want to keep living your life the way you're living, or do you want something different? I would probably assume, and correct me if I'm wrong, I assume that you're here because you want to learn, and you probably want to make a difference in your lifestyle or in your life. Like, maybe you're working a job that you don't like. Most people don't like their jobs, right? I'm a big believer that, the world is whatever you create it to be. You don't want to work for that guy, John Smith, and get up at 8 in the morning and go see him and he's telling you what to do. Then you could change your life, and options can help you do that. So, so what I'm saying is, don't do what most people do. Most people roll their stuff. Don't do that. Most people think, okay, I'm going to trade SMCI. Let me go back to SMCI, right? And I'll just show you a chart. And by the way, that's SPY. By the way, I'm making a lot of enhancements as time goes on in these. I want to be able to click into the ticker and then pull up a chart. So as time goes on, it's just time consuming to do that. So as time goes on, stay patient. If you have feedback, or when you have feedback, please feel free to email me. I've had lots of people do that so far. Or if you have any issues like connecting or opening an account, something like that, let me know. Send me an email. And I respond to all of that stuff. But in the meantime, if we look at a chart, most people will think about it like this. They will say, oh my gosh, I bought SMCI at $30 and now it's $20, and they freak out and they sell their shares, number one. So you always have kind of three choices that you can do after you, let's say, put a trade in, right? So let's say I have 100 shares of SMCI, or I sold a put and then I got a sign, whatever the scenario is. Let's say I have some shares of SMCI and my basis is $30, right? And then it drops to $20. You could do one of three things. You can freak out and sell your shares and take a realized loss. That means, hey, I just paid $30 and now I sell the shares at 20 bucks. So I lose $10 per share, right? $10 per share times 100 shares is $1,000. That would be a realized loss. You're never getting that back. So it hits your pocket, right? Not on paper, but it actually hits your cash flow. Or you can do choice number 2, which is let me just stick my head in the sand. Let me sit on my hands and let me just wait, hope, and pray that it goes back up. Well, guess what, people? Hope and prayer is not a strategy, not a good one anyway. And so that's not a great strategy to have. Or you can do option number 3. You can embrace it. Listen, you already identified that particular ticker, in this case, we're looking through an example of SMCI. You already identified that you like that ticker, that's a strong ticker. If you like it at 30, bro, you should like it better at 20. I mean, listen, Warren Buffett, the genius of investing, and by the way, he trades options a lot, but he doesn't talk about it that much. He says, if the price goes down, you like it at 30, you should love it at 20. It's the same company, man. And load the truck up. He has this, like, if it goes on sale, load the truck up. So there's no reason to do option number 1, freak out and sell your shares, or option number 2, sit on your hands and hope and pray that it goes back up, but embrace it. Option number 3, embrace it, sell another put. And you can calculate here. And you could do it with a calculator too. I'm going to show you how to do that. Listen, I'm not here to say, hey, buy my app. I'm showing you how this stuff works. I'm showing you in a calculator. But the app makes it just easier for you. And it's about efficiency. Listen, we all have the same 24 hours in a day. It's how you spend that, right? So you could do it in a calculator. Hey, I bought 300 or 100 shares at $300. And then $30. Excuse me. I bought 100 shares at $30. Then I bought 100 shares at $20. Now I have 200 shares at $25, right? So you can use a calculator. It gets a little more complex, and usually you have to use a spreadsheet if you have, let's say, not 200 shares, but 500 shares. Hey, I bought 100 shares at X dollars, then I bought another 100 shares at another. So it's a little bit more, instead of using a calculator, you need a spreadsheet. Or you can say, hey, I bought 100 shares at 31.25. I'm just making this up, right? And then I sell a $20 put, right? Because now it goes down, right? And then I'm thinking about maybe selling another put, let's say $19. And then, let's say if it goes further, I don't know, let me just add another 100 or 200 shares at $17.50. I'm just making this up, and I'm just showing you, how quickly and how easily, you can say, okay, now I have 500 shares. My average cost is $21.05. My total cost, the capital that I have in the trade, is $10,525. It just calculates it all for you on the fly. It's like magic. And as we're talking about multiple lots, I want to say this. These things, listen, I don't create a script before I get up here and talk. Actually, I didn't take a shower yet. I made a late breakfast. I was hanging out with my son for breakfast. And I just go on the fly because I know all this stuff. It's already in my head. And sometimes things will pop into my head and I just want to spit it out before I forget. And this is one of those times. I want to tell you guys, if you have multiple shares, let's say in this scenario, hey, I end up with 500 shares of SMCI. You should always be selling covered calls against shares that you have. Now, when you have multiple lots, it gets a little bit more involved, right? It's not just sell one call, right? How much did I pay for it? Now it's a little bit more. I can sell a call. I can do one of two things. I can sell 5 calls at my average, right? Or over my average. You never want to sell a covered call with a strike price that's lower than what you paid for the shares. Please don't do that. Yesterday, I was meeting with somebody, like a one-on-one mentorship, and he had 3 contracts actually, and they were all lower than his basis. Don't do that. And his answer was, here's what he said, and maybe you guys can relate to this. He said, hey, Michelle, I want my money working for me, and I don't think it's going to go up that high. So that was his answer, because it's kind of far. Like his strike price, his ticker has come down a bit, and it's kind of far. And that was his answer. And I have to say, that is the wrong way to trade. You can make money temporarily. Do you guys want to make money temporarily, or do you want to make money for the rest of your life? Who wants to make money temporarily? Raise your hand. And if that's you, you should drop off this call, because anybody can make money temporarily. You could teach your 10-year-old kid how to trade options, and he could make money short term. Anybody can do it. It's so easy. Anybody can literally do it. No experience, young kid, whatever. The finesse and the skill comes in keeping it, not losing it, making the right decisions, managing your positions over time. And if you're selling covered calls underneath what you own the stock for because you think it's not going to go up, you are making a big mistake. Don't do that. Don't do that, because why do you think you're smart enough to you think where the market's going to go next week? Why would you think? I don't ever presume that I think I know where anything's going to go. I don't know. Tomorrow it could go up, it could go down, and I want to be in a position where I don't care where it goes. I just want to make money. And because I don't want to make money only if it goes up. What kind of lifestyle is that? So then if we get a bear market and the market's going down, or if it stays flat or something, what? Then I don't make any cash flow. That's a stupid strategy. That this wouldn't work for that. I want to make money all the time because I have money. I have stuff I want to pay for. So don't do that. So don't sell a covered call with a strike price lower than what you paid for it. So some people ask, well, what strike price do I choose, Michelle? Choose what you paid for the stock. So let's go through this as an example. Hey, I have 500 shares of stock, and I bought 100 here, and I bought 100 here, and I bought 100 here. I can sell 5 with a strike price of, let's say, $22.50, right? Because if I own 500 shares at $21.05, and if it's in $1.50 increments, right? We'll want to see what the increments are, right? So $21.50, right? As an example. Right now the stock's trading for 22 and change. So you don't necessarily want to do that. But my point is this: you can sell 5 with a strike price of $21.50, or there's 2 choices, or you can sell 1 contract at, let's say, whatever you own this stock for, $31.25 you own it for. You can sell 1 contract with a $31.50 strike price. You can sell 1 contract here with a $20 strike price. You can sell 1 contract here with a $19 strike price. So I always choose how much do I own the stock for? A higher number, because I don't care about keeping stock. And frankly, I don't want to keep stock. I just want to make money off of it. I just want to use and abuse it. Like, I just want to use that ticker to create cash for myself ongoing. And I don't care about price appreciation. If I had 100 shares of SMCI and the stock skyrockets 20%, I'm not crying, and I'm not thinking, man, I should have made blah 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 more. No, I'm like, hey man, I made X dollars. And if you rewire your brain to think like that, you're going to have a higher likelihood to be successful. Now, if you, I want to say a couple things. If you sell 1 contract at $31.50 and say 1 contract at $20, let's say something gets assigned, you have to call the broker dealer and say manually, and you have to do it in a certain period of time. You got to do it Monday before the market closes, generally. You got to call them and say, hey, I had this $20 contract that is signed on Friday. I want to use the 100 shares that I bought on, I don't know, whatever, November 22nd of 2025, that with a cost basis of $19.72. I want to tag that contract that got assigned to these shares that I bought, right? So you can do that, and then you have to check it. Broker dealers make mistakes. Banks make mistakes. Everybody makes mistakes. Computers are great, but sometimes, the code is wrong. So you have to check it also afterward. So number 1. Number 2, if let's say you sold 5 contracts with a strike price of $21.50 as an example, and then they all get assigned, you're going to have a loss on some of those because, hey, I bought these 100 shares at a higher price, right? So you're going to have a loss. What that means is that's going to trigger what's called a wash sale. Now, broker dealers aren't going to you're not going to have a notification that pops up, or nobody's going to call you and say, hey, John Smith, you created a wash sale. No, but you have to understand these ahead of time. And it doesn't matter really what a wash sale is, the impact of a wash sale and the result of a wash sale. You don't want to trade that ticker for 30 days after. So if it's SMCI, you don't want to buy shares again within a 30-day window, because you're going to have kind of an issue and some challenges if you do that. I'm not going to go down a rabbit hole and talk about why. It's not that important. You could hit me up in the chat if it's super important. I look at things like this. Listen, you only got so much room in your brain to put knowledge, right? And I give this example a lot. I like to use analogies because I'm not here as a professor teaching grad students and talking with big words because that makes me feel good. No, I want to like talk so you understand it. And here's the analogy that I use. I walk in my kitchen and I flip the light on. I don't know. Like sometimes I do wonder about that. Like, how does that work? Like, what kind of wiring is that? How does the light actually go on, right? But it doesn't matter. What matters is I flip the light on and the light goes on. So don't fuss about what's not important, right? So keep that in mind. So just don't sell stuff for less than what you paid. And if you did that, don't buy that ticker again for 30 days. Let's see. Michael has a question. Just finished an old video of you breaking down credit spreads. Or actually, I guess that's not a question, but a comment. It was excellent. Thank you, by the way, for the feedback, Michael. Much appreciated. Credit spreads, I historically have not traded a lot of credit spreads, but I get a lot of, of course I've traded them. The reason I haven't traded them in the past a lot is because it was always a pain in the neck, right? Let's walk through one together. So the advantage of a credit spread is a couple things. Number one, it gives you finite risk. So finite risk is sometimes very attractive to people. Okay, like I'm trading Tesla and I don't know, like maybe it's going to go bankrupt or something. And I don't want to lose all my money. So it's sometimes advantageous to have like a limit, right? Like worst case scenario, I can only lose X dollars, right? So that's kind of cool. The problem with credit spreads is it was always a pain in the neck to like structure, right? So like let's say, for example, an iron condor, and not to use big words, but it's just basically a put credit spread and a call credit spread. So what I'm doing is I'm selling a put here, I'm buying a put here, and the difference is my insurance, you might say, my protection on that contract. And the most I can lose on that is the difference between the two, right? So if I sell a $100 put and then I buy a $95 put, that's $5 in between. That's the most I can lose. Or you can sell a call credit spread. So let's say I sell a $100 call, then I can buy a $105 call, and that's my insurance, and the difference is $5, and that's the most I can lose. Or I could put them together. I could sell a put credit spread and a call credit spread. And that's kind of cool because then it kind of creates, if you can envision, I'm driving on the freeway, and as long as I stay within the lines, I make all the money, right? So think of it in that term. And so that's an iron condor. The problem is it has 4 trades to it, right? I'm selling one, I'm buying one, I'm selling this one, and I'm buying this one. So that's 4 trades total. So it can be like cumbersome to like, okay, let me flip back through my broker dealer screen and let me take a look at, let me look at the contracts, and let me just either write it on a piece of paper or let me put it in a spreadsheet. I'm collecting X dollars for this one that I'm selling. I'm paying X dollars for this one that I'm buying, right? What's that net? Well, how much money do I make? You could do it, but it's a pain in the neck, right? Or you could just do this, right? So you could say, okay, let me look at Tesla as an example. And by the way, it works really good for like expensive tickers. So sometimes people say, okay, Tesla is $400 a share or 370, right? I don't have a big account, let's say, and I can't trade Tesla, but I like it. So maybe you can't sell a put on it, but you can trade a credit spread on it. So that's kind of cool. So that's why that's advantageous. And then let me see what my expiration. Tesla is kind of cool because it has 3 days a week now. Monday, Wednesday, Friday expiration. This Friday, the market's closed. But in general, Tesla, Meta, Google, Amazon, I think is one of them. They have more choices for expirations, which is kind of cool. So let's look at, I don't know, let's look at Monday, just as an example. I think the 6th is Monday, if I'm not mistaken. And then you can choose, right? So for my put, like what strike do I want to choose? And I always look at delta. Delta is like, listen, it could be as hard as you make it or as easy as you make it. Sometimes people ask me questions, or, the Greeks, right? People say the Greeks, you probably heard that before. Theta, Vega, and all these different things. Bro, don't make it that confusing for yourself. Delta is the most important one. Delta is just like how likely is it to go from here to here before it expires. It's a percentage of likelihood, right? It's kind of like what insurance companies use. I pay for car insurance. By the way, man, I'm in California. I pay so much money in car insurance. First of all, I drive a nice car. I drive a 911 Porsche. And then my son is 21, and he has a Porsche also, a Taycan. And he's had a few accidents, and I've had a few. More than a few, maybe. Speeding tickets. I got a speeding ticket just a couple days ago. Man, I don't know. I think I'm going to sell that car soon because it is kind of a magnet to cops, first of all. But my point is this. Why do I pay a lot? Number one, I live in Los Angeles, so there's probably more of a likelihood to get in a car accident in LA versus, let's say, I don't know, what's a small town? I don't know, Oklahoma City. That's probably, I don't think that's a small town, but you get what I'm saying. Something in Vermont, let's say, some town I never heard of or whatever. It's probably more likely to have an accident, or maybe more likely for my car to be stolen in LA because it's a big city, right? Also, my son, I just told you, had a few accidents and he's young. And I've had a few speeding tickets. So what does the insurance company think? They think, I got to charge this girl a little bit more because she's more likely to wreck a car. And the car's expensive. A 911 is like 150 grand or something. So if I did total my car, they got to write a big check, right? So I'm going to pay more in car insurance. So that's how insurance companies look at things. So insurance companies, they kind of identify what's the likelihood of this thing happening, of this person having an accident, right? And then they try to charge you accordingly. And what they do is they use actuaries, right? It's a big word, but it just means that they look at likelihoods. What's the likelihood I'm going to have an accident? And their intention is they want to charge everybody, all their policy holders, right, a little bit more than what they think that they're going to pay out in claims. And then they make that difference. When you sell puts, you are doing the same sort of thing. You are becoming like an insurance company. Hey, I'm going to buy your stock, Jane Smith in Idaho, if your stock crashes. So you're going to buy insurance, right? If your stock crashes, I'm going to sell you that insurance. You're going to pay me a premium for that. And if your stock crashes, I'm going to buy it from you. So you're good. You don't have to worry. You can sleep at night better, right? And guess what? If your stock doesn't crash, I'm not going to buy your shares. And I'm also going to keep the money you gave me, the premium, because that's non-refundable. So when you sell a put, it's the same as being an insurance company. Do you want to be, listen, I know I'm talking about a lot of different concepts here, but it all kind of wraps together and relates to one another. Do you, people talk about selling options, buying options. I want to buy an option because I think the stock is going to go up and I want to put up $100 and turn that into 1,000. That's a gambler. That's a consumer. It's a retail person, a retail consumer. Do you want to be a gambler or do you want to be like the insurance company? The insurance company, I used to live in Connecticut many years ago, the Hartford Insurance, a big company, right? Big insurance company. They have these big, tall skyscraper buildings all over the place. I don't know what pays for that. Who pays for that? Because they make money, right? Insurance companies make money. They make money because they pay out, if they're doing a good job, they pay less in claims than what they take in premium. Selling puts is the same motherfucking thing, right? So know that. So let's get that straight, first of all. Let me go back to the credit spread. Sorry for the swearing, by the way. Sometimes like you got to enunciate it to get your point across. I don't know. What do you guys think? If you're offended, I apologize, and I sincerely do. But I think sometimes you need an F word or a curse word to really enunciate what you're saying. And I'm passionate about this. Listen, all you guys should be trading options and changing your life, and you can do it. And I'm trying to help you get there. So let's go back to the credit spread for a moment. Let me look at the time. What are we at? Oh, 12:48 already. Holy cow! I don't have a lot of questions either. CMC driver, hard to drive a 911 slow. That's a fact, man. It is hard to drive a 911 slow. I drove that car back and forth, I think, I don't even know, 3 or 4 times. New York, LA, because I was living kind of between New York City, which is an amazing place, by the way, downtown Manhattan, and LA is pretty amazing as well. I try to be in amazing places. And I drove back and forth in that car with my daughter a couple times, and 2 dogs, by the way. And I think I got 3 tickets one trip and 2 tickets another trip. I don't even know. Yeah, I don't always see cops. Like the other day when I got pulled over, this is how he pulled me over. I dropped my son. My son's car is in the shop right now. I don't know. He had a massive pothole and something happened to the suspension. I'm having a problem with the insurance company paying the claim. It's like this, I don't know, mess. And he hasn't had his car for 2 months. So it's been a combination of me giving him rides and then he borrows my car sometimes. So I drove him south a little bit, like wherever he was working. It was like, I don't know, 40 minutes away or whatever. And then I had to run an errand for my daughter who was also at work. And I was doing a bunch of things and I was trying to get my own stuff done. So I don't know, I'm in a hurry. And LA, I don't know if any of you guys are in LA. Man, there's a lot of traffic in LA. and there's tons of lanes, right? So I don't know what freeway I was on. I don't pay attention to that. I just drive with Waze. But I'm driving, and the HOV, the carpool lane, is empty. Nobody's there. I don't know. And there's 4 lanes over here, and it's kind of like stuffed a little bit. So I crossed into the HOV, and then I was doing, I don't know. I wasn't even really going that fast. I think he said I was doing 85 or something. It is relatively is not that fast. I think the speed limit is 65, and it's a 911, so it's not that fast. But the cop was next to me. I didn't see him. I don't know. I got to look a little bit more closely. So he was there. He pulled me over, crossing the line into an HOV lane. So you're not supposed to do that. Cross the double white or whatever. And then the second thing was I was by myself, so you're not supposed to be in an HOV lane with one person. And then the speeding. So it's like all of those things. Anyway, I'm kind of digressing. Let me go to this credit spread. So let's go back to Tesla. Hey, we're looking at Delta, right? And hopefully you guys like my Arla says, I love it, coach. Be yourself. I appreciate that. I have to say that I have the most beautiful community, and I feel so blessed when I wake up in the morning, and I love helping somebody. It's funny, my friend Todd, who I'm going to hang out with in Cabo, Mexico tomorrow, he said something like, because I try to be very clear about conversations, right? I find that everybody in life is doing the best they can. They literally are. Even I have a little bit different philosophy than a lot of people. I try not to be judgmental, right? Listen, I made mistakes. We all make mistakes. We're all doing the best we can with what we have. And so inherently, I think we all mean well, right? So my friend Todd said, I'm going to help him do some programming because I'm so passionate about this vibe coding. Man, I created all this stuff, and I never would have thought a couple years ago that I would be capable of such a thing. And it's not as hard as you think it is. So I'm going to give him a hand, and we're going to hang out at the beach, that kind of thing. And he said, 10 years from now, because he owns a furniture store, and he says, if you were to have helped me grow from here to here, I don't want you to be talking shit to me about me or whatever. And I was like, oh my gosh, that's so funny. I would never do that. I want to see people successful. My point was this. I find that most of the time relationships kind of go sideways, in a bad direction, because there's not communication, right? So I try to what you see is what you get. Sometimes it took me a while to get to this point, and I think I'm not fully there yet, and I'm always working on myself. Life is a journey, right? It's not a sprint from here to there. It's a journey. It's like a marathon, and I try to be very open, right, with communication, even though it might feel uncomfortable sometimes, telling somebody you might think that they're going to take it the wrong way or something. So thank you, Arla, by the way, saying, be yourself. I appreciate that. I try to be myself, and if we're not meant to resonate, you'll hop off or you won't come back next week. It's all good, and I wish you well. Anyway, let me go back to these puts, these credit spread, right? So Delta, I was talking about Delta. So Delta is the main thing that you want to think of, right? So let's say, I want to start with a 19 Delta on the put side. And then I also want to start with a 19 Delta on the call side. Now they can be different. You can be closer to the money on the put and further from the money on the call, or vice versa. I find that I don't want to try to predict the direction of a stock. I'm not in the position to do that. I just want to make money no matter where it goes. So I try to keep the same sort of difference. So if I do a 19 Delta put, I want to do a 19 Delta call, but you could do them different. And then you're going to choose the width. How much risk you want to put up? You want to put up $500 risk? You want to put up $250 risk? Let's just start with $250 as an example. And what used to take literally maybe 30 minutes with a spreadsheet and a calculator, it just pulls up in a second for me, like magic, right? Here's the contract I'm going to sell. Here's the contract I'm going to buy. Here's the other one that I'm going to sell, because it's four legs, right? Four trades, 4 legs. What's my total credit? $73. How much money am I putting up? What's the maximum I can lose? $177. How long am I holding it for? 5 days. What's my rate of return? And by the way, this rate of return is for 5 days time. I didn't annualize this out because the number was so big. I'd rather under promise, over deliver. I want to be more conservative sometimes. But a lot of this is a work in progress. but it pulls it up for you automatically. Okay, I want to be more aggressive. Let's say I want to go with a 30 delta. I don't know. Let me just change that to 30.29, and let's say I want to keep my 250 risk, and I want to not look at April 6th, but I want to look at April 8th. I don't know. And I'm just gonna, oh, actually just reset. Let me just put my 30 delta back in here. And then I'm just going to click calculate, and it gives me the ability to like really very efficiently look at different trades, right? So that's kind of, look at this, 106% rate of return for a 7-day trade. So this calculator is dope. It's like my friend, oh my gosh, I'm thinking about Todd because I'm going to hang out with him tomorrow. I used to say dope a lot. Now I've been saying magic. It's dope. It's like magic. Like I just can like just change this and let me go a little bit closer to the money. I don't know. Let me just see what that does to my premium. And then just hit the calculate button and it just pulls it all up for me, right? So it's super cool. What used to take a really long time now takes a very short time. Let me look at some of these messages. Best Buy something. I suggest you find something else besides SMCI. They are being investigated for smuggling. Yeah, you're right. I did a video on that the other day, actually. And I haven't done a video in a few days. I'm going to get back on the groove. It's just been time consuming. Listen, I'm not here. A couple things. Number one, I'm not here to say, hey, you should trade this or hey, you should trade that. Man, you're a grown person. You got your own responsibility. It's your decision. I'm here to teach people, right? I've been trading for 30 years. I'm 50 something. Oh my gosh, how did I forget? 53. I was thinking 52, 53. I'm 53 years old and I started trading when I think I was like 23 or 24. It was one of those. I've been trading for a long time. I started with commodity futures and options, energies, metals, currencies, stuff like that. For the past, I want to say 10 years, I've only just been doing stock options. I think it's better. Sometimes ETFs, but not commodities is my point. And I've only been trading. I don't work a regular job, and I do what I want when I want. And I feel blessed. I'm not bragging, and I'm not saying that to impress you. I'm saying that to impress upon you what's possible. If I could do it, you could do it. Listen, I'm not any different than you are. Listen, we're all beautiful creatures on this planet, right? Taking one spin around the world, this spin. If I can do it, you could do it. So that said, I'm not specifically suggesting anybody trade anything. It's your decision. But I will, just to respond to this comment, yeah, they're being investigated for smuggling. I think they were, the 3 people I think got arrested for, shipping chips illegally to China. Listen, sometimes people make poor choices. That doesn't mean that the company's shitty. That scenario is what made the price go down. Let's go back to SMCI for a minute. I don't care so much why something happened. Sometimes I look at that because maybe I want to get the background information, right? But I don't care so much about that. Here's a fact that there's still a powerhouse AI company, powerhouse. And now instead of being $30 a share, they're $20 a share. I've traded SMCI. I don't have any right now, but I've traded that. And I think that's a good trade, actually. So just because somebody got arrested and the price went down, that doesn't mean it's a crappy stock. But again, this is just an example that I'm giving you. If it doesn't work for you, that's cool, man. There's like 500 tickers, or whatever. There's no shortage of trades that you can choose. Okay, so let's see. Michael says the Greeks used to intimidate the crap out of me. Now, not so much. Yeah, listen, it does not have to be hard. You don't have to be some MIT genius or some whiz in calculus or whatever. I don't even look at things. Sometimes I get questions on my YouTube, theta, vega, gamma, whatever. And I'm like, I got to look that stuff up because I don't even use it. And I'm not super versed in it, honestly. And I'm saying you don't need that to be successful. You just need sell puts, sell covered calls. You need a few things along the way, and that kind of thing. Let's see. Who else has a thing? So Debbie says, I just signed up for your learning academy and I'm excited to begin. And she said, you're a wonderful teacher. Bless you. I appreciate that. Listen, these apps are off the hook. The Learning Academy, I got to tell you. So there's a few things. I'm going to show you a couple things. So the calculator is what it's super common. That's where we just were. So like you can calculate short puts, averaging down. This is going to be live soon where you can analyze your portfolio. This is going to be amazing, like a freaking game changer. The Academy is kind of cool. It's got 3 pieces now. So when I first started it, it's got a Learning Academy. So Learning Academy is kind of like Duolingo, and it uses like easy to like walk through like questions and answers in like a gamified way, kind of like Duolingo when you're learning a language. I was inspired by that app, which inspired me to create this one. I also added an AI smart tutor where you can ask questions like, hey, like, what's a put? How does that work? Blah, blah, blah. The paper trading app, this is way better than any broker dealer. This isn't fully functional yet. So I'm in the middle of doing a lot of these things, but these are going to be so amazing, like life-changing, I promise you. This community app is free for everybody. So this is a free app. I haven't looked at it in a couple days, but you can just create an account here. I have to change the layout a little bit, but I want to make it more like a Facebook kind of layout where you don't have to click. So I'm in the process of adjusting that, but this is a great spot for you to connect with other people, like-minded people. Who doesn't want to hang out with other people that are similar to themselves, right? And then this is amazing. Let me follow the whales. I had an app for a while in the iOS store about insider trades, right? So you guys have probably seen me before. Let me pull up the SEC Edgar page and, okay, I'm trading Tesla, and let me see who is buying and selling, those shares, right? And then you can kind of like click through, but you got to click through a bunch of things. And then you got to like really, oh my gosh, what the heck is that? You got to really like try to understand what that means. But this, I already did Tesla, but let me do a different one. Let me do SMCI as an example. I don't know. Let me just use that. Let me pull that up and let me just get that data for me and make it easy to read, right? So this just takes a moment to fetch the stuff here. And then basically it gives me kind of like an analysis. It's not saying, hey, trade this, don't trade this, but it's saying, between being bearish and bullish, it's probably bearish. And and it gives you some verbiage here, the general sentiment, some patterns, that kind of thing. You can click into, who are some insiders that are buying or selling. This guy, George, sold 59,000 shares. And it gives you a good sense of, hey, if I'm trading the stock, this is probably content that I want to know about, right? So that's kind of a cool thing. And that's open. These I'm working on. Trade Scanner. So many people say, oh my gosh, I only have $1,000, $10,000. Where should I start? So this kind of, you put in like, I want to be tickers under $10. It's so much different than bar charts or whatever. There's a few different scanners out there. But this is more intuitive because these apps, I'm a trader. So here's the difference between me and, let's say, other YouTubers or something like that. I'm somebody who's been trading for a long time that's creating applications to help other people do cool stuff and be more efficient versus, let's say, other YouTubers that are they're not necessarily traders, although they say that they are usually, but they're more YouTubers that trade, right? So it's like this is created for traders by traders, which is me. So it's kind of cool. So stay tuned for more on that. And yeah, Deb, bless you back. So that's beautiful. Listen, we live in a beautiful world. And if I could help people like accomplish, cool stuff, that makes me feel good too. Anyway, I ran a little bit over. I think I have to give my son a ride or he's going to take my car, one of the two. Like I said, he's kind of stuck. I think a couple people dropped off. It's all good if you drop off. These calls are recorded, so stay tuned for that. I'm going to get back tomorrow. Maybe not tomorrow, but the next day I'm going to do a couple of videos while I'm in Mexico, chilling in Cabo San Lucas. So, and I'm going to show you, man, you could trade anywhere you want to be. Like, it doesn't have to be in the U.S., L.A., New York. It could be anywhere. It could be, I lived in Bali for a long time, a couple of years. And you could be anywhere, and you just need a laptop. So it's life-changing, right? So anyway, I want to say thank you to all you beautiful people here and for your attention, and give yourself a big pat on the back for being here and learning and taking steps to, to grow and to change your life. So thank you for that. All right, everybody have a beautiful day, and I will catch you on the next live stream.